the best thing to do for me is to make sure that I follow my system, and that includes taking trades even when there's impending news coming.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome back to the Two Traders Podcast. I'm Walter, and Darren is on the line. Hello, Darren.
Hello, Walter.
So today, Darren, we're going to talk about the changing markets and how the fundamentals, or I like to call them the fundamentals, how do those sort of dictate which market you choose to trade or how you approach your trading. So first of all, what sort of got you into this line of thinking?
Well, obviously, at the moment, we're all getting the traders that I work with generally trade the pound dollar. And at the moment, there's the uncertainty about the UK leaving the EU. And, as a result, a lot of us have been pretty beaten up by the markets the last couple of weeks. Nothing out of the ordinary, actually. But obviously, when you're going through it, it feels, when it's constantly on the news that there's something fundamental going on in the markets and you're losing, it kind of heightens the pressure. And it might be in line with any other fundamental changes in your market. I remember when we were leading up to the general election, was it last year? I think it was last year. Again, there was a period just before that where we all really struggled, 4 or 5 weeks, where it was very difficult. And obviously, the questions that are coming up are, should we change anything? Should we trade a different market? Should we change time frame? Should we take a break? And, what do we do when these fundamental things make it difficult for trading? Now, I've long had the view that you should test your strategy over a lot of market conditions and a long time, and the numbers should play out over time. So you're going to get these periodic bad times, and hopefully the numbers should play out and you make more in the good times than you lost in the bad times, and that's where you get your consistent profit from. But I'm kind of interested on your view, because the difficulty, here's the point, is the difficulty is if you decide, well, when I've decided that the market's gone bad, I'm going to change, the risk of that is, you get heightened sensitivity to that, and then every time you have a bad day, you decide that the market's changed and you stop, and then the next day's brilliant, and before you know it, you don't know which way is up or down, and you've got like mass confusion. So yeah, what's your thought? Do you know what I mean?
Yeah, completely. Of course I do. Yeah, I think. Well, if I understand this correctly, I think this is something that sort of when I first started trading, when I first started trading, it was actually before September 11th event in New York, and which was horrific, of course. And what was interesting was this kind of set off now at this time I was a really poor trader, but what happened was the focus was, is the U.S. going to go and invade Iraq? Okay, and so traders who've been around for a long time know that essentially what happened was every time there was Colin Powell, who was the defense secretary at the time, every time he went to speak, the euro would move around like a Mexican jumping bean, and it was insane. It would just go so much. This was a time when the euro was also in a very strong uptrend, and so you had the euro just sort of breaking out of a slumber and starting to move up. And what was happening was every time Colin Powell spoke, it would move the markets. And it was incredible. So this was the major news piece, right, that moved the markets. And then later on, after they invaded Iraq, it sort of moved to jobs, and the non-farm payroll became a really big thing, and it was for years. And I guess you could still argue that it is. And these things come and go, right? So is the Reserve Bank of Australia going to cut interest rates or raise rates? When that becomes the issue for the Aussie dollar, then you'll see people sort of wait for that news. And here you have now, as we record this idea of the Brexit, right? will the UK leave the EU, the European Union? Will they leave the European Union or not? So all of these things, they change over time, right? So I guess the way I look at this is I've sort of changed my thinking, because when I first started trading, I thought it's really important to stay out of the market when these people are speaking or when this news is going to come out, because you really want to wait for that to happen, and then you can get in. And part of my thinking along those lines has changed, because now I believe that you can see all you need to see on the charts. So let's say that you think that the market's bullish on the pound, and let's say that you know that there's going to be some important announcement or somebody's going to talk tomorrow. So the question is, I've got this bullish signal on the pound, I should take it, I should buy the pound right now, but I'm really worried about what's going to happen tomorrow, so maybe I should wait until after the news tomorrow. Well, I think that, and I used to not think this. I used to think that you needed to really kind of pick and choose your places. I think in some ways it depends on your approach, and if you're trading the 5-minute chart or the weekly chart, right? So that's pretty critical. But but now I actually think that if you've got all of your fail-safe pieces in place, in other words, a stop loss, and you know how much you're going to risk on the trade, in theory, and you trust your broker, in theory, what should happen is, if the trade goes bad, you take the trade today, so you buy the pound today. If the trade goes bad and the pound collapses tomorrow on the news, you've got your stop loss in place. But if you don't take the trade, what you're doing is you're picking and choosing when you should filter out those signals, which I'm not saying is necessarily a bad thing to do, especially if you've got a lot of experience. But I think that I would be more likely to not take a trade because the signal to me is a little bit iffy than because I think the news is going to affect it. Because as we all know, the news is what affects everything. I mean, depending on how you look at it, but most traders will tell you the news is the fuel for the fire that moves the market. So if the pound is going to go up, then maybe because I got the bullish signal today, that means that the news tomorrow is going to send the pound up. And if it doesn't, so it could, in other words, maybe it goes up 200 pips tomorrow, and that's a really good move for me on this system that I'm trading. So maybe I should just take the trade because I have the signal and not really worry so much about the news. I think you can overthink it. And I think that if you're a technical trader like I am and you just take technical signals, I think it's really difficult to interpret the news correctly. So even if you do wait to the news, how many times have we seen where, so-called positive news comes out and then the currency in question goes down? I mean, it's just crazy, right? So I don't think that it's necessarily that critical that you should avoid taking a trade because of the news. And I know that people now are all looking at the possible Brexit, and this is affecting pound pairs. But I don't really think that that's that important. I think that if you were trading the 1-minute charts or the 5-minute charts, fair enough. You wait for the news to come out and then you take the trade. But if you're trading anything from 4-hour or above, I don't really think that filtering your signals based on impending news is necessarily a good idea. I think that even though I still, to this day, I still don't take the non-farm payroll, like the trade the day before the non-farm payroll, I won't trade it. I don't think that that's necessarily that critical anymore. I really don't. I think that if my signal's good, I think I should be doing that. And I don't know why I don't do that. Probably just more tradition more than anything. And because sometimes you will get a good trade on the back of that news on the non-farm payroll announcement. But I don't. So to me, it's not that important, Darren. So I don't know. What do you tell the traders that you work with when they ask you this? Do you tell them, yeah, maybe we should look at a different market, or no, we should keep doing this, or we should be more cautious, or how do you approach it?
Well, I think like you, I don't think there's one answer. You kind of have to find, where you're comfortable, and what you want to listen to, and what you want to exclude. And the last couple of weeks, some traders have moved to other pairs and they've done well. Some have moved to different time frames. And some have stayed, doing what they always do, and some of them have lost, and some of them have won. Really, long term, I want to make trading as simple as possible for me. And for me, I look at the decisions that are hardest to make and hardest to live with, and I just try and reduce them as much as possible. So, you know, I've just been letting the numbers play out. I've been, you know, taking the setups just like I would. I'm not really taking any notice that there's a fundamental change, and, you know, I'm kind of using the same exits. I'm being a little bit more cautious with my risk, so that's something that I am changing. But I know that just like when I run my tests, there are, you know, a couple of weeks or months where the fundamental background changes and it's difficult for my system, and I just kind of like accept that I'm going to give a little bit of money back, and that's kind of the price that I pay for not having to get up every day and make difficult decisions and assumptions about whether the fundamental conditions have changed enough again to start trading, or whether I should sit out. So I'm just trying to make the process as easy as possible when it comes to my decisions. So that's my choice, and I think really it's a case of finding yours. I think the idea of trading fundamentally, you know, say you know, looking at the fundamentals of the markets and deciding, right, then, you know, this is clearly going to be a strengthening currency and this one's going to be a weakening one, and just trading purely on that is a whole different. I think that actually is much more of a better approach if you're more academic, and you presume that the sort of technical approach would suit academics more, and I think the technical approach probably suits creative, artistic people more, and the fundamental, if you're more of you know, a much more sort of structured person, and you're very good in academic scenarios, I think the fundamental way of trading would suit them better.
Yeah, and a couple of things that you say there sort of resonate with me. One is this idea of, you know, that's the risk you take, and and that is the risk we take. And when you say that, it reminds me that that's kind of the thing that what I thought you were going to say is that's the you said that's the price you pay for trading this way, and getting up. And what I thought you were going to say is that's the risk you take for not getting up in the morning and shining your shoes and going off to a job or whatever. That's what I thought. That's what I thought you were going to say, is that, you know, because the guy who goes to his job as an insurance salesman, most days he knows when he gets home he's basically punched the clock and he's made some money, right? But you could work all week as a trader and or all month for that matter, and come out on the short end. So that's one of the things that you have to keep in mind. But again, if you're a business owner, maybe your ice cream shop isn't doing so well and you're losing money. You're paying the people on the payroll and you're buying the ice cream, but it's not selling, and you know, you're paying rent for your location and for the I don't know, the freezers and the electricity bill and all that stuff. So, you know, you have to keep that in mind, that as traders we really do have really, really low expenses. You've got your internet, you've got your computer or what phone or whatever you use to trade off of, and then you've got your trading stake, and that's really, there isn't really much beyond that. I mean, you can have some backup internet. I think that's a good idea. But other than that, you know, what else are you going to spend it on? You're going to spend it on your losses. Your losses are where you pay rent, just as any other business pays rent. So yeah, so I don't think that that's necessarily a bad thing at all.
Yeah. Well, I'm going to have what's the date now? It's the 20. Yeah, May's going to be a losing month for me. And you know, you could argue that if I had, you know, we all knew that the EU referendum was going to happen, and I suppose you could say we could predict that you know, conditions would be uncertain and more difficult to trade, and you know, so you could argue that a smart move would be to, you know, to perhaps have a break, but then are you being too cautious? Are you being too risk averse? And you know, other traders have done well this month. You know, they just happen to be on a different time frame, and things have kind of worked out for them despite the the fundamental situation. It's quite hard to find retail traders that do use fundamentals now, and I'm not an expert on it by any means. So for me, it makes sense to basically ignore them. I mean, if it's something you're not comfortable with, then why include it if the numbers play out? So yeah, for me, I'm just going to keep on trading, accept that I've had a losing month, and hopefully next month will be better.
Yeah, and these things don't. I mean, if anyone who's probably gone back and back tested, they probably have seen months like this. If you had traded your system over the last 12 years, I'm sure that somewhere along the line you'd have a month like this. Maybe it's a month a year, maybe it's a month every year and a half or 2 years or whatever, but I'm sure these things come up. And to me, the funny thing is the very fact that those people who are trading essentially the same system on a lower time frame are doing well tells us really all we need to know. I mean, it's one of those things where people say trend following doesn't work anymore. Trend following is over. The trend following funds aren't making money anymore, and so it's all done, and the markets have changed, and this isn't going to work anymore, and that sort of thing. And then of course the next year all those trend following funds have a banner year. It's hilarious, really. If anyone is thinking about investing in a fund, one of the best times to do it is to wait for the financial journalists to all jump on the trend following funds and talk about how they don't work anymore, because I tell you what, you can go back and look at the articles and then compare them to the data, and I can give you some links in the show notes for this episode. But it's pretty funny to me how magic that works. And my guess is that for the people trading on your time frame, Darren, what will probably happen is right about the time that everyone's decided, oh, this isn't working anymore, it'll probably have a banner week or a banner month or whatever. You know what I mean? That's one of the things that we have to remember about the markets is I don't think we're really designed to trade them well. I think we're designed to make a lot of mistakes, and you kind of have to fight that. And so when you feel yourself going strong in a direction such as this isn't working anymore, I got to dump it, the markets have changed, that may mean that it's the tide's about to turn, and that if you just stick with it a little bit longer, you'll see it completely turn around. So it's something that I think some traders should think about. And if you don't believe this, then or if you do believe this, you may want to go back and look historically and test this out. It doesn't mean that that'll be what happens in the future. By testing it out, you can see if this is true, that after the deepest drawdowns, does the market run up? And I think you'll find that it does. In fact, some of the traders who've posted their backtesting data in the forum, Darren, that's the same thing. If you go back and look at their equity curve, you'll see right at the end of a dip where they have a drawdown is a really steep move up out of it. And that happens almost universally. So it's something that I would consider if I were trading a system that were in a really bad drawdown. I would keep in mind that as long as I'm confident in the system, it's probably just a really bad drawdown.
Yeah, and as long as you're not trading too large a position to deal with the drawdowns, then you have to be a little bit conservative on the size of your positions, and as long as your account isn't all of your funds to trade with as well. I'd hate to think that ever blew a trading account completely again, but I know if I did, it wouldn't be all of my money. So yeah, you have to kind of be realistic with the risk, certainly.
So one thing I have to ask is, have you ever talking about the fundamentals, have you ever seen, for example, they have these news channels or these financial channels where it's in the States they have, I think, CNBC and Bloomberg and MSNBC or something like that. So they have these, and what do they have? And Sky News would be one. Some of the other ones I forget. Financial Times. I don't know if Financial Times has a channel or not. But have you ever sat and seen like the complete rainbow of flavors that come through? Like they'll sit someone down, some expert. Doesn't matter if he's like an economist at a bank or hedge fund trader or whatever, hedge fund owner, and they'll say, what do you think about China this year? What's going to happen in China? Is the bubble going to burst, or is there a bubble? And what's funny is they'll parade these people through, and every single one of them has a different take on it. I mean, every single one.
Yeah. Didn't someone sort of run like 20 years of tests on what the top funds and bankers and economists had predicted to see if following their signals was worth anything, and at the end of the day, they the best you could have expected was break even, and you would have been much better off just to do a buy and hold on the S&P 500 or something. It's why I don't like trying to predict what happens next, really. I like to see it as a numbers game, and I think that the people who trade with a strategy that kind of accept that tend to be more consistent over the long period.
And I like to think about who's on the other side of the trade, because we've got all these opinions, all these people who think certain things. So if I'm going in and I'm taking a trade where I consider it to be with the trend, so I'm a trend following trader, I'm going with the trend. I think so when I go into that trade, who's on the other side? Because the market's made up of opinions, and these opinions are, they're placed into the market in the form of risk. And so who's on the other side? Who are these people that are on the other side? And this is why I get so into the open position ratios, that a lot of retail brokers are now offering you data on this. And you can see what percentage of the traders with this broker are long the euro or short gold or whatever. And you can see, okay, because I like to be in that little small group of traders that are the contrarians, the people that are going against the crowd, because I know that most of the people who are voting, who are who are helping the broker create those pie charts, most of those traders aren't making money. Sadly, it's true. And so if we can make sure that we're in that little group, I feel much more comfortable just in life and in trading, certainly, in being in that little group. I just don't like to feel like I am following the herd, because I know that the herd often just run right off the cliff.
Are you doing that from what you see on the charts then? So you're doing that from the charts rather than basically the fundamental scenario. So you're looking at the charts, and from that you can assess the consensus in the market.
No, so what I'm talking about, well, yeah, the charts are definitely part of it, absolutely. So the chart would be the signal, but you can get from your broker, you can get the data that says of all the traders that we have. For example, IG Markets offers this information, and so does Owanda. They say, look, of all the traders who are in silver right now, 79% of them are going long silver, and only 21% of them are 21% of them are shorting silver right now. And so what I want to do is I'll keep an eye on these numbers, because what I want to do is wait until that gets really extreme, so that we've got 85, 86, 87% of the market is doing one thing, and then I'll look for a signal on the other side, so I'm part of that 12%, 13% on the other side. So I'll use it's almost like I'll use those data as a watch, as an indicator, basically as an indicator, okay, looks like the Aussie yen is getting close now, so I'll go to the Aussie yen chart and see if I have a signal. So it's kind of a way of, it isn't really fundamental analysis. I guess it is in a way.
It's technical.
Yeah, in a way, it's just contrarian trading. You're saying most of the retail traders are really, really bullish on the euro right now, so that means that I want to look for a reason to sell it. Doesn't mean I'm going to sell it right now. It just means I want to look for a reason, and then go into the charts and dig in there and see if there is a reason. Yeah.
Right. And then you'll look for the chart pattern to confirm that they might be badly positioned, basically.
Yeah, exactly. And if you look at it historically, because people will sometimes say, well, that doesn't sound right. Surely that it would be the other way around or whatever. But if you look at the historical data, they actually, on Owanda's one, which I'll link up in the show notes here, you can actually see price too. So they'll map price onto the open position ratios, and you can see how price moves against the crowd. Yeah. You know what I mean? It's awesome. Yeah, it's great.
Well, if you think about it logically, it has to. If price moves up and down, then everyone has to be buying when it's right at the top for then, you know, for it to like be wrong and then it to fall down again. You know, because for it to be right at the top, then everyone surely must be buying. So yeah, I mean, it's quite logical to me.
Yeah.
Have you got anyone to develop an indicator that you can just put on your chart?
No, I'm sure that there probably is one out there for MT4 or something like that probably maybe that could link into it. And the other one that I'll link up for you guys is have you heard of the greed and fear index? I think it's called the greed and fear index.
I have heard of it, yeah.
Yeah, so I think that's kind of I think Money Magazine puts it out. I'll link it up for you guys in the show notes. But basically, that is kind of a hodgepodge of different markets, and you kind of look at that and see, well, is everyone really greedy right now? Are they all buying, or are they selling, or is it somewhere in the middle? Is it fairly neutral? And from time to time, you can actually find particular markets that will work as a greed index as well. Like for a long time there, the pound yen was a really good one. So like the pound yen, looking at the pound yen 2006, 2007, 2008, in that kind of area, you would see how as the pound yen went up, that meant the market was basically really, there was plenty of traders who were interested in being greedy. And other ones like Google or Facebook stocks or some of these darling stocks like Apple, you can watch those too. And as they really get pumped up and go higher and higher, you know that the market is okay with greed. They're getting very greedy right now. And as they start to collapse and fall, you know that there's some fear in the market. So it's another way of kind of using that as a proxy for what's the general tone of the market. So yeah, I think it's a really useful thing. The thing that people don't want to get mixed up if they get into this, if they go down this rabbit hole, is you want to make sure that you're not going against the pros. So you can get data on whether the pros are positioned too, especially in the futures markets. And so you can see, well, everyone's long the euro. Well, if the pros are long the euro, that doesn't mean you want to necessarily short it because it's very different to the retail world where we know, like, you know, the mom and pop traders are more likely to lose. Yeah. So.
Yeah. Sure.
Okay, so Darren, sort of in summary, I guess what I want to say about fundamental analysis, and you know, should that come into your trading? I suppose it depends on the individual. I don't think it's necessary. One of the most common questions I hear from traders is, "Hey Walter, so you're doing these naked trading setups? Do you also use fundamental analysis and stay out of certain news times and this sort of thing?" And in general, my answer is no. I don't think it's that critical. I do stay out the day before the non-farm payroll, but I'm really questioning whether that's the right thing to do either at this point, especially if you're trading a daily or a weekly chart. I don't think it's really that critical. I think the best thing to do for me is to make sure that I follow my system, and that includes taking trades even when there's impending news coming. So for me, I don't try to interpret fundamental analysis. I think it's very difficult, and I think it is for a lot of traders, really. But I suppose it does depend on your approach and your beliefs, and if that's something that's really critical to your decision making, then go for it. So that's really where I side with the fundamental analysis question.
Yeah, I'm with you, Walter. I think there's no right and wrong answer to this question, and it's really a case of you know, finding what fits best with you. Whether you're going to stop trading or make any changes or literally take no notice of it at all.
Right. Yeah. Excellent stuff. Well, thanks a lot for the topic, Darren. I think this was a good one, and I will catch you next time.
Yeah, I'll see you next week, Walter.
See you.